Inflation's running hot, interest rates are soaring, and house prices are finally starting to fall sharply across the globe. So is it finally a great time to buy a house? Or will there be much better opportunities for home buyers if they're willing to wait? I'm Biko Konstantinos, and that's what we're going to talk about today. If you own your own home or would like to own a home one day, why don't you give this video a like? My goal is to support you with quality and independent analysis to help us understand what's really going on with the economy so we can make the most informed decisions. So please subscribe to my channel. I would absolutely love to have you on board. And stick around to the end because I'm going to be giving my personal view regarding when I would be looking to buy a house. Now, the conditions for home buyers has been absolutely shocking for the past 2 years. So if you've been trying to buy a house, you've had to deal with the craziest, most speculative housing market probably ever seen. And this didn't just occur out of the blue. Governments and central banks around the world went so loose with their monetary policies, they basically inflated a massive global housing bubble. And it's obvious looking back because as interest rates fell to zero, house prices started going through the roof. And this was a nightmare scenario for people trying to buy a home. So then what happened after house prices rose about 30 or 40%? Global inflation. When the money supply is increased exponentially, inflation is the consequence. And not just any inflation, big bad wolf inflation of the likes we haven't seen in 40 years. No governments will allow cost of living increases to soar out of control. So around the globe, central banks started raising interest rates and raising them aggressively. Now you gotta understand, interest rates really have been trending downwards for about 15 years. So any change to that overall cheap money policy is gonna really shock the system. And yes, it has. So interest rates have gone from near zero to about 3 or 4% official interest rates. And that means that real mortgage rates are closer to 5 or 6%, which in many cases is more than double what you could have gotten after COVID. And recently we've witnessed a global rental crisis with a lack of available rental properties, rent prices soaring, and huge demand competing for properties. So a renter who's been trying to buy a home is basically getting hit from all angles. Cost of living skyrocketing, so it's harder to save for a deposit. House prices are more expensive compared to wages than any time in history. Add to that, soaring interest rates means that buyers' borrowing capacity has been significantly reduced. A buyer who was previously able to borrow $500,000 when interest rates were rock bottom may now only be able to borrow about $380,000, which is a significant decline. So just when it seemed like there was a light at the end of the tunnel for home buyers, with house prices falling, interest rates soar, so yet again they face another significant barrier to purchasing a home. So no matter how you look at it, people trying to buy a home have faced an absolute crap storm. But can that improve? Yes. Yes, it can. Basically, as soon as interest rates started rising aggressively, the housing boom ended. But because we've already seen many months of rate rises, does that mean we're closer to the peak and could actually see interest rate falls soon? We're definitely close to a short-term peak because central banks can't just keep raising interest rates or they'll destroy the entire economy. But there's basically no chance we're going to see rates go back to zero. And many commentators are now suggesting rates could stay higher for longer. Soaring cost of living is a massive risk to countries because hyperinflation can actually destroy economies. So unless we saw a global catastrophe, there's really no chance that central banks would risk dropping rates back to zero. And because ultra low rates were the biggest factor that inflated house prices, it's unlikely that house prices are going to rocket anytime soon. And if interest rates stay higher for longer, there's actually more chance that house prices could grind lower. Let's consider why. If interest rates keep rising, it's pretty much guaranteed that countries would go into recession. And that's because of two main factors. First, higher interest rates massively affect consumer spending. When you're paying more for credit cards, home loans, car loans, etc., you've got less free cash flow, so you basically can't spend as much. And when the consumer isn't spending as much, that means that companies aren't making as much profit, and when companies don't make as much much profit while their expenses are rising, they then have to lay off more and more people, unemployment rises, and unemployed people spend even less, and that results in economic growth declining, which is the definition of a recession. Now, because we've seen interest rates rise so sharp so quick, it's going to take several months for the impact of those interest rates to really be felt in the economy. That's why I think 2023 is when the real impact will start being felt. And when that happens, unemployment levels will rise. And when unemployment levels rise, it actually puts downward pressure on the housing market because it's harder for unemployed people to bid on houses, which means there's less buyers or less demand, but it also means it's harder for unemployed people to continue paying mortgages at high interest rates. So sadly, some could be forced to sell. So while after COVID, many had additional savings because of all the government handouts and stimulus, these high interest rates have quickly eroded a lot of that savings, and credit card debt's really starting to soar. Now check out this chart of percentage change in credit card debt in the US. During COVID, with forced lockdowns and no travel, credit card debt was significantly paid down, but look what's happened lately with surging interest rates. Credit card debt has risen 15% from the same quarter a year ago. That's a massive jump which hasn't been seen in many years. And personally, it should send some shivers down your spine because countries have encouraged huge amounts of debt by keeping interest rates so low for so long. Now that they're forced to raise interest rates, there could be a colossal effect on consumer spending, which could result in a very significant recession. The sort of recession you really don't want. Now, if economic growth was super strong in 2023 and unemployment stayed super low, we could actually start to see some modest house price gains. But there really is a lot going on in the global economy. According to the International Monetary Fund, the global economy is experiencing a broad-based and sharper than expected slowdown. There's cost of living crisis, tighter financial conditions, Russia's invasion of Ukraine, and the lingering effects of the COVID pandemic. So the IMF is predicting the lowest growth profile since 2001, except for the global financial crisis and when we were in the middle of the COVID pandemic. So there really is a lot going on in the global economy, and I just don't see any real quick fixes. Either way you look at it, it's going to be a bumpy ride. It just depends how bumpy. Fun bumpy or destroy your backside bumpy. So now to my personal view. I'm wise enough to know I've got no idea exactly what's going to happen with house prices. And I never recommend what someone should do because everyone's situation is different. But if I was a home buyer looking to buy a house, I personally wouldn't be rushing because I believe there's very little risk that house prices will rise sharply in the short to medium term. And I actually believe there's more probability chance that house prices will continue lower as the effects of higher interest rates are fully absorbed into the market. And another reason why I wouldn't rush is that if economic conditions really start to deteriorate, there's the potential for much lower house prices. And in my opinion, that would occur if interest rates stay high and unemployment starts to rise sharply. Now, I'm not saying that will happen, but it is a possibility. And if I was a home buyer, I'd be happy to wait just in case house prices really start to decline. I'm Biko Konstantinos.